Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome from Philip and I to our monthly used car trade values catch up with CAP HPI. This episode is slightly different to our regular chats and is something we've been wanting to do on the pod for some time now, as we'll be covering both current trends for the month of August and for the first time we'll be looking at more longer range future forecasts. So we're delighted to welcome back podcast regular Derren Martin, CAP HPI's Director of Valuations. Welcome back to the pod, Derren.
Thank you, Curtis.
Good to have you on, and we've got a bit of a double header. So as ever, Derren will be looking at current trends, and we're also joined today by Dylan Setterfield, Head of Forecast Strategy, who will be discussing CAP HBI's future forecasting. So welcome to the podcast, Dylan.
Thanks, good morning.
Welcome both Derren and Dylan, and welcome Dylan. As Curtis said there, we get Derren on every month talking about the latest in terms of the current valuations. But welcome both of you. And I think Curtis has said there about obviously one thinking about the current and one thinking about the future. But I think you're probably very much both involved with both, aren't you?
Yeah, it's a pretty close team, and we get involved in all sides of things. Dylan is also an expert on what's happening in the current market, and we also review the forecasts and speak regularly on what comes next, and also what comes a little bit further down the line. So we're heavily involved in all sides of the valuations. Yeah,
exactly. You can't really do one without the other, can you? To be fair,
no.
So it's very much interlinked.
The start point of the forecast is always the current use value. So
exactly,
they are directly linked.
Exactly. Well, let's start off. Let's find out sort of, Derren, with yourself. Thinking about where we are today and bring us up to date with how August has performed in terms of that trade value performance, that 3-year 60 point, and what you saw over the course of the month.
Yeah, so it was a 0.6% drop in August in our CAP Live products. Obviously, we're valuing every day, and that was the accumulation of the month, which is about £140. If you look back, that is quite normal for the month of August. But I think what is unusual is the strength that we've had over the previous few months. So we've since sort of middle of May, it's been really, really stable. So what's happened in August is in line with everything else, but as I say, it's kept very, very stable. We've seen a really, I guess, a summer of stability. The average drop for August, if you exclude sort of the two COVID affected years, was a reduction of 0.7. So it's really similar to be in line with that. But we have had last year, there was quite a large decline of 2%. So you can see you can have different things happening during this month. But if you cast your mind back to last year, we were at the start of sort of values dipping away quite significantly, which culminated in Q4 where they dropped by 10.5%. So thankfully this time we're at a very stable time, and it's been one of the most stable summers that we can remember for used car values. So a real positive, and it feels like it's been like that not just from May, but almost from the start of the year, really, since those drops last year.
I suppose the question is, does it make it any easier for you guys? I suppose it doesn't, does it? That I think at the minute there's a lot of activity behind that sort of stable headline figure.
In a way, it makes it more difficult because you're digging around within the data, and there's no necessarily clear pattern. When values are either going up as they did dramatically in 2021, every time you looked at a different model range, it was like, well, that needs to be put back up again. And the same when it dropped in the final quarter of last year, you're kind of looking at things and it's dropped since the last time we looked at it. We've had more data in, whereas now you're really digging into the level of detail of looking at different engines, different trims, Obviously, the fuel types are all really interesting. So we still have the same amount of workload. We're not just sort of sitting around not moving.
No.
You have to really look at the detail behind it. So in a way, it's not so exciting, but it's interesting and more involved potentially. Yeah.
Yeah, Derren, I do remember those heady days when we'd talk to you on a monthly basis, and values were all over the place for quite a while. And as you say, we're now in that summer of stability and pretty much stable over the course of the year. So what's your take on what's actually driving this stability now?
There's two things. It's always about supply and demand within the market, obviously. And what we're seeing at the moment is that demand is pretty good. The retailers that we speak to and the retail data that we're tracking show that it's okay. It's either okay or good for retailers. From the sort seems to be sort of two camps there. So the August school holiday period hasn't had too much of a downturn. Still seems to have been steady demand. So the retailers are doing okay. I think a key point is that none of them have overstocked really. They're being a little bit more careful because of stocking fees, interest charges. So when they do sell, they're looking to replenish. So they're not buying in bulk, but they're dipping back in to the wholesale market and looking to buy stock. And the other big side of it is that supply levels are not huge. There's a shortage of cars at that 3 and 4 year old point. Because if you cast your mind back 3 or 4 years, we had 2020 of COVID. 4 years ago, 2021 was the semiconductor crisis, where semiconductors and other components of vehicles led to a shortage of new cars. So there's not so many new cars coming through at those key age and mileage points. So you've got dealers that are doing well and need to replenish their stocks. And when they do go and replenish their stocks, there's not a plethora of cars for them to choose from. So they're having to pay sort of top money for them. I also think that because of what happened in Q4 last year, that got prices to a reasonable level. They haven't gone back down to pre-2021 levels, but they're at a level now that are reasonable for the consumer, reasonable for the retailers to buy, and it all just seems very, very stable. They don't need to bid low on cars, and if they want them, they've got to compete for them, which is keeping prices where they are. But also they don't want to overpay, so prices are maintaining their level really and staying very, very stable. Obviously, there's loads of different models that we value, and some are still quite volatile, but overall it is a stable picture.
And that's what we expected. If you go back 12 months ago, we were telling everybody, well, we expect to get quite a difficult time at the end of 2023, as we're expecting to see quite a lot of volume coming back into the market, but then it would get better. And we always said this year was going to be favourable to normal seasonality. And those things that Derren mentioned, the fact that we're expecting demand to continue to be quite robust, and we already knew we were going to have less supply. If we compare to 2019 levels, we're missing more than 2.7 million cars. So that's going to continue to have an impact as we go forward.
And I'm assuming, Dylan, that the impact of the Olympics, the Euros, and the election that everybody asks you every single time there are these kind of things on didn't have a significant impact.
No, it never does. There might be individual days when people aren't going into dealerships, and then they go in the next day instead.
I wonder how many times people ask you that question before those events and what the impact
every time.
Yeah. Exactly. So, Derren, just thinking about, you mentioned fuel types before, and obviously we can't have you and Dylan on without talking about the electric vehicle market. But how are EVs in particular now sort of performed over this first half of the year, and particularly through the month of August?
Yeah, so we're now 2 years. Total 2 years in total of monthly drops for EVs. If you go back to September 2022 was when values started to come down. There was obviously a lot of pain felt around that time, and values came down considerably over that period of time. But we have now reached a sort of a more stable time. They still dropped by more than the average. So electric vehicles in August dropped by an average of 1%. Which is equivalent to £240 at that 3 year point. But the rate of decline has certainly slowed. And since that point 2 years ago, we've taken 60% out of battery electric vehicle values. So they've really come down dramatically in that time. And I think that has led to retailers being quite wary about stocking them. But we've certainly been talking recently that it's a great time to stock them and for the consumer to buy as well. And we are now seeing some models that have sort of maintained their value in a more stable market. So Audi e-tron Sportback, Cupra Born, Jaguar I-Pace, VW ID3, they've all they've not moved for 2 months now in value. So a real stable picture for those. And you've got some that have actually gone up in value. So we put the Q4 e-tron Sportback up by 1%. The Mustang Mach-E has gone up by a couple of percent. MG5 up 3%. Nissan Leaf has gone up, only slightly, but it's gone up. Peugeot E2008 and the Model S, so a bit of an older model there, but that's gone up. So it's a real sort of difficult thing to call the EV world because you have got some stability. You have got some that are now going back up because they look really good value, but you have got some that have fallen quite dramatically as well. So you need to pick your models very carefully with that. The i4, BMW i4 Grand Coupe dropped by 4%. Fiat 500 electric dropped by 2%. The Taycan continues to feel a bit of pain. That's dropped by 3%. It's over £1,000. And the Model Y, we're starting to see more of those coming back into the market, and that's dropped by over £1,000 or 4%. So you've got quite a difficult market to call, and you can't really discuss EVs in general, as we've been saying for quite a long time now. You have to look at everything in isolation because some of them look really good value, and sweet spot for retailers seems to be below £20,000, and almost irrespective of age and potentially mileage as well. If the cars are hitting that sort of price point below £20,000, then they look cracking value. So retailers are certainly dipping back in and looking at that sort of price point on EVs. But as I say, some are still continuing to drop.
And you'd be quite surprised by some of those cars now that are appearing at those kind of £20,000 price points. You look at 3-year-old Audi e-trons and Jaguar I-Pace, they're quite expensive cars. And, 3 years with average mileage on, that they're around that £20,000 mark retail, which is, we probably wouldn't have believed that a couple of years ago.
And was that, did you expect that, Dylan? I know we'll talk later on around the longer term future and what you're looking at, but thinking about what we've seen around EV within the gold book and the forecasting, is this kind of where you expected it to see this extreme volatility, sort of initial heavy depreciation before we start to see, this price point and a little bit sort of, as you say, some of the models now look very attractive as a used proposition?
Yeah, so we expected to see big decreases because, if you're going back, let's say 3 years ago, then we thought that electric cars were overvalued, and we were going to see more coming back into the market, and we would see some quite big reductions. We were making adjustments, 15-20% in a lot of models. If you go back 3 years ago, we weren't expecting it to come down as far and as fast as it did, from about 2 years ago. And we kind of, there's a lot of these models where you can do a direct comparison with an internal combustion engine version. And our kind of default assumption has been that we should see a small premium for an electric version because you've got that total cost of ownership benefit. But that's certainly not what's happened. We've got about 70 models where we're able to do a comparison. And now in about 70% of the cases, the electric version is worth less than the petrol or diesel equivalent. And if you're looking at 4 years old, it's nearly 20% less, more than £3,000. Just in a lot of cases, obviously that's an average. In a lot of cases, it's thousands and thousands of pounds more than that. And in some cases, it really doesn't make a lot of sense. But equally, it's hard to see how you're going to get to any kind of comparable situation again, because either the electric vehicle has to go up in price, which doesn't seem likely that's going to be a big factor, or the petrol or diesel version is going to have to come down in price. and we're in a scenario of reduced volume. So it's also hard to see how that can happen. So we are now expecting to have these big differences to be fairly well sustained as we go into the future. So the case is going to be quite bright for a consumer, because those used BEVs are going to still remain and look pretty cheap.
And that's the difference where, you're trying to think of these trends, and Derren, to your point, you're just trying to, you're trying to watch that activity and react to and reflect what's happening in the marketplace. And to your opening point of today, supply and demand, isn't it? It's a simple factor of supply and demand within EV, even more so.
Yeah, we've seen more data, more sold data for EVs, but by the end of July than we've got in the whole of last year. So more EVs are selling. There's still a bit of a reluctance from dealers to buy them, from some dealers, especially independents. We're seeing less than 20% of independents seem to have advertised an EV over the past 6 months. That's sort of the retail data that we track, and less than half of franchise dealers have advertised them as well. Obviously, they can buy for sold order when they don't appear on their websites and things like that. But there is still a reluctance to stock them. But when you do track them in the retail market below that £20,000 price point, these BEVs they're moving on within sort of 31 days, which is actually quicker than petrol cars, which is at 35 days. So they are selling. We also see bigger margins on electric vehicles as well within the retail data. So there's real opportunities. I'm not here to do a sales job on electric vehicles. I do think that retailers have got to grasp the network at some point. They are obviously very wary about what's happened over the last couple of years, but we're not going to see that situation again. As Dylan said, they are now looking cracking value when compared to their ICE equivalents. And cars like a Mocha, it's about, I think it's £4,000 below. The EV is £4,000 below the equivalent petrol. So
4.5, yeah.
4.5. Some really good opportunities there, really. So yeah, the devil very much in the detail, and there will be still some pain to come for some EVs, but in general, you've got things like the Leaf. We see them advertised sort of £8,000. Corsa electric, all right, the range isn't brilliant, but for a second car, cracking deal, £9,000 retail. Hyundai Kona is £11,000. You've got ID3 just over £11,000. You've got Model 3s at 16.5. I mean, these are cracking deals now.
And Derren, we always ask you about the coming month. Of course, we've got a plate change coming in September. So what are you saying in the latest editorial about September?
Yeah, so September, you can actually see values going up during September over history. We've actually put them up 5 or 6 times over the last 12 years. So that's based on what's happening in the market. Obviously, you get people coming back off a holiday. There isn't a plethora of stock because the September plate change doesn't really kick into the used market until later in the month of September and even into October. So you can see values going up there. We've obviously had a very stable time of it. I actually think there will probably be a small drop go in September, which again, that's happened on a number of occasions as well. So I think you're going to get more of the same. We're going to have more stability. There isn't going to be loads of cars coming back initially, and demand will probably peak up a little bit. So I think you're going to be in for another fairly stable time. As you then move into October, you'll start to get more volume back. I think the market can cope with it as well. So it's usual for values to drop during the final quarter. They won't be dropping by anywhere near as much as last year, but there will probably be sort of a gentle move down as we move into October. But at the moment, September is looking very positive again.
I say part of the thing is we always look at the monthly movements, and because of the way live works, that is quite an arbitrary cutoff. Really, we're just saying at one particular point in time. I'm going to disagree with Derren actually, because we think it's going to go up slightly in September, but absolutely agree with the rest that.
Let's see which way this goes, eh?
Yeah.
Small movement.
The normal thing of moving into the winter months, and we will see some reductions, but yeah, much more favourable than normal seasonality.
I'll have to get this bit edited. to savour for the final quarter of the year, won't I? See what
This
the outcome
is
is.
evidence. Just a final thought on September. What is I mean, this is to both of you really. What is your expectation for part exchanges? I mean, Derren, you said the activity really starts towards the end of the month, but in a suppressed new car market, what level of part exchanges are you expecting to see coming back into the network?
Well, the retail market has been struggling all year. The new car activity has been focused on fleet and leasing. So I think part exchange wise, also you've got dealers that are, I mean, that's still their prime source of stock as well. So they don't need to hit the remarketing arena. They go straight onto dealers' forecourt. So I think you won't get as many as you've got on previous Septembers with regards to retail swappers, but you will get the fleet returns coming back in. Obviously, Motability will probably have a very active month, so you'll get cars from them. Probably some rental returns as well as the summer ends, and they may well also be popular with manufacturers to sell some of their cars. You've also obviously got the dynamics, which you can't escape, of the ZEV mandate. So what's going to happen there? You've got manufacturers that are no doubt going to be holding back on selling ICE cars to try and hit their targets for BEVs, but also you'll get some really good deals on BEVs, I would imagine. I saw your article recently, Phil, on that, which is going to be quite a volatile end to the year in the new car market, and you can have effects on the used car market, but that can be a positive. So if they're holding back on ICE, then people might go and buy used ones. So yeah, I think September there won't be a load of retail part exchanges coming back. There will be some fleet returns coming back, which will probably have more of an impact on the market.
Yeah, well, a fascinating update there on August and September. So after the break, we'll be looking further into the future with Dylan.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
And thinking, I mean, Dylan, we're obviously Derren's on every month, and we're talk a lot about the current values. But think about, for the listeners, we may not be as familiar about the future marketplace and what you get involved with around that gold book, and obviously the fact that you do get involved with the new car as well as the used car sector.
Yeah, I mean, it comes down to those two things that we talked about before, and you can make it sound simple by saying it's just supply and demand, but obviously there's all sorts of levels of complexity that sit within it. We've got a general outlook to say we've had this period since the pandemic where there've been much fewer new cars registered, and we know that's going to result in lower levels of used car volume, and we're already seeing the impact of that with those favourable movements that we've seen so far this year. The flip side of that is that then in 3 or 4 years' time, as registrations are recovering, then we're going to start to see more volume coming back. So on that supply side, that starts to become a bit more negative. But we're also in quite a positive situation when we're looking at the outlook in terms of demand. We've had that first reduction in base rates, and that's positive for all sorts of reasons. And okay, it's going to be slow, but we are expecting to see further reductions in interest rates eventually, and that's all positive in terms of both supporting consumer demand, but also easing some of the pressure on dealerships in terms of interest costs as well.
And I mean, how far do you go out in terms of your forecasting now?
So we do anything up to 5 years old today, out for another 5 years into the future.
And I mean, the key for yourself, Dylan, I mean, you get sight of obviously the new car market, of what's planned by the manufacturers, what products coming through when it's looking to enter the market, which gives you that insight, and to support with Derren in terms of current value is what's coming, what's around the corner in terms of those new cars, particularly when we start, we'll talk a little bit later on about those new entrants, but you are very close to that new car market as well, aren't you?
Yeah, and the obvious fly in the ointment is ZEV mandate, and we've got an assumption in our forward view in terms of new cars that we're actually going to see reductions in registrations in 2027 and 2028, and a lot of that being driven by manufacturers stopping selling internal combustion engine models in the UK or potentially across Europe, because there's no other way they're going to be able to manage to get anywhere close to avoiding fines. The big problem with ZEV mandate is when it goes up. It's 34% in 2027, goes up to 52% in 2028. And that's just not manageable by normal market dynamics. There's going to have to be something that goes on to ensure that happens. So it is really, really difficult to try and work out on an overall level the direction of travel. And then you get into the detail of looking at stuff by manufacturer and by model, then obviously it does start to get really, really complicated.
And Dylan, just picking up on that point, what's your forecasting actually showing for 2025? What's actually standing out for you? I mean, you've mentioned the impact of the ZEV mandate, and that will be massive. But is there anything on the horizon that you're particularly looking at?
There's not really any current things other than the ZEV mandate. There's not really any big concerns. But of course, if you look over the course of the last few years, it's the things that you can't predict are the things which potentially have a very big impact. Pandemic, obviously, but also Russian invasion in Ukraine, and that's had all sorts of significant effects across the automotive value chain. And it's those things that aren't predictable. We can talk about them. We can talk about, for example, the situation in Taiwan and potential for China to invade, and that potentially would have a massive impact again on semiconductor supply, because the single largest supplier of, particularly of automotive semiconductors, is Taiwanese. So that's one of those things that kind of you have half an eye on. Yeah. But you can't really assume that any of these things are going to happen.
And bearing that in mind, I mean, you say that you're looking out 5 years from today. What are you seeing in terms of that 5-year forecasting at the moment, with all these sort of known unknowns at the moment?
Yeah, it's quite an unusual situation, really. So we've talked before about the kind of favourable movements that we're seeing now, and we expect that to continue. So if you look at 12 months from now, we actually think prices will be slightly higher on average in 3 years than they are today. But that's not actually what we've put into our forecasts, because if we forecast cars to be worth more in the future than they are now, that causes all sorts of problems for a lot of our customers.
Yes,
and we'd probably be absolutely inundated with queries if we did that as a measure across the board. That's not to say that we don't, on occasion, deliberately set particular vehicles above where they are today, if we genuinely think that there's something that's happened that means that there will be a very considerable difference in 12 months' time. But we're kind of trying to balance out that situation. So we are actually a bit conservative at 12 months. We expect that positive market to continue into the second year, but by the time we get 3 years out, we're starting again to see more used car returns from the registration improvements that we've seen over the last 18 months to 2 years. And then we start to get into that next cycle of the positivity disappears, and you start to get into something which is worse than normal. But then if, as we expect, we get further reductions in new car registrations in 2027, 2028, that puts you back again on a more positive situation. So, long gone are the days where, we were just deciding, is it going to be slightly better than average or slightly worse than average? it's almost like there's no such thing as average anymore. We're just moving constantly into completely different market environments.
And I mean, both yourself, Derren and Dylan, to be fair on this one, but in terms of observations, and before we got the view of where we think Q4 might go, but is there anything in terms of specific observations that we're starting to see where the current market is aligning with that where we felt it would go in the future, or there's significant trends moving away from what we thought the market would do? Anything that you sort of keeping an eye on, or specific standouts on that?
The main thing you really with the ZEV mandate is as soon as you start to mandate things that aren't natural dynamics, it can obviously cause concerns with the used market as well as the new market. And that's kind of where you are with things. The overlying sort of backdrop is that you've got less volume in the market at the moment, but then you've got all of these things that have been thrown at us over the last few years. And I know you talk of like COVID cars that are slightly different spec. You've obviously got the impact of all of those sorts of things that have happened over the last 4 years. And then you throw the ZEV mandate in as well. And it's just really messy. And as Dylan said, the level of detail that him and his team have to go into to look at the forecast, it just means that it's really difficult to look at particular trends. As an overall trend, we are saying that values will probably go down in Q4, but then you're going to have a strong start to next year. We would expect. This time last year, that wasn't expected. There's a lot of dealer trepidation with what happens in January. Will you get the normal January bounce? And I mean, we're in August. It feels crazy to be talking about January already. But from the dealers that we're speaking to, I do think that they will be more likely to buy in the final quarter than they have done in over last year. So that will also help those values. They will drop away a bit, but they won't drop away in sort of as much as last year. So you've got all of those dynamics that are playing in, but the main one has got to be the ZEV mandate and what happens over the next few years. And that jump that Dylan's talked about in 27 to 28, it's incredible. And you have to feel sorry for manufacturers that they're having this forced upon them to get to a point in time. As I say, as soon as you start mandating things, it upsets the dynamics, upsets the status quo of the used car market.
And I suppose to the point there that from your side, Dylan, stability, because setting residual values, setting those future values, you don't want that volatility, do they? The market doesn't want the constantly moving those future values too much based on short-term market dynamics that's happening in the current market. But some of these will influence that long-term market future.
Yeah, absolutely. And, the situation is we've not had a normal market now for the last 7 years, which, if you said to us 10 years ago that was what was going to happen, we probably wouldn't have believed you. But there's all the subtleties within it all. We talked before about battery electric vehicles and how they were selling quicker than ICE cars. But again, that's not quite the same if you're looking at nearly new. Because of the discounts that are available on the new cars, in some models we're ending up with new cars being cheaper than 1-year-old used cars, and obviously that has an impact not just on the values themselves, but on the time it takes to sell those cars. So, it's we look at averages, but we're constantly having to dig a bit deeper and look at the detail that sits behind it. We track our forecast accuracy. And if you look back to the forecast 1 year ago and 2 years ago, they're pretty well on target. Obviously, that's not quite the same if you look back 3 years ago, because in 2021 we were in the middle of the carnage.
Yeah.
But we do expect that to come back and be reflected in our 3-year forecast as we're moving forward. But even with, on average, it being on target, there's a lot of movement and variation within that. And obviously, our forecasts were too high on electric vehicles and were too low on most petrol and diesel models. So you're constantly having these trade-offs.
Because, the question's always been about parity of EV and ICE, hasn't it? When will ICE vehicles, EV vehicles become, level in terms of market value? But as you both mentioned before, that's kind of it's very distorted in that, some are significantly lower, as Derren pointed out, around the mocker. Some are still too high, but we'll get on to in the next question around sort of those new entrants and what they're going to do to the market. But you're constantly trying to balance that future as to that falling in ICE vehicle supply and the sector changes that's happening in that ICE market against what's happening in that EV market as well.
Yeah, absolutely. And there is a big focus on the new car, and a lot of the time when people are talking about price parity, that's what they're talking about. They're talking about the fact that the new electric vehicle is generally more expensive than the petrol or the diesel. But then in the used market, we've gone the other way. And, in most cases, that electric vehicle is cheaper than the petrol or diesel. But I don't think that's really made it through into the kind of public consciousness. I don't think they're aware. And we have had some articles through into the mainstream media. But in general, I don't think people are aware that these cars are actually cheaper than a petrol or a diesel.
Actually, Dylan, a spoiler alert, because there was a big piece in The Guardian just a couple of days ago, which I know we'll be following up on next week's podcast, but it's really talking about that parity now. So it'll be an interesting one to follow up. Now, talking of new entrant car brands, I mean, that they used to be quite an unusual occurrence in our industry, but for the last 18 months or so, you've been faced with the challenge of forecasting values for a number of new OEMs, including the likes of BYD, GW Aura, JACU, Moda, and we've got Leap Motors, Xpeng, Lynk & Co, and others waiting in the wings. So how do you actually go about forecasting for these new models from brand new brands?
Well, it's obviously very difficult.
Yeah.
It's the same situation as we're in when there's something new comes onto the market. So if you think back to when Nissan bought out the Qashqai, for example, that wasn't really the same as anything else that existed. And Nissan's marketing department were telling us how it was going to replace several different models, and nobody in the industry quite really understood it. But it turned out they were right. Yes. But it's the same situation. All you're doing is saying, okay, what can I compare it to? So even if there aren't directly comparable models, I can get, maybe a ceiling and a floor and try and work out where it sits between those guidelines. And it's the same with the new manufacturers. We've got established models in the marketplace, and we try and estimate where they fit within that hierarchy. The difficulty, obviously, is they're all trying to do the same thing at the same time. So they're all trying to penetrate the European markets, and some will be more successful than others. We have regular meetings, and before launch, we're having those discussions and talking about what are their plans for remarketing, what are their plans for aftermarket, etc., etc. Because not just the cars themselves, it's that whole environment that sits around it all. And I think there have been some lessons learned from some of those new brands in how some of their initial early terminations have been handled. Some have got very established plans even before they registered a single car, and others are just trying to deal with things as and when they come up. So obviously the more proactive ones we would take a more positive view on. The cars are all generally very good quality, at least as good as the traditional manufacturers that we'd be comparing them to. But you've got that difficult situation of, is the consumer going to part with the money for a car from somebody that they've never heard of or only recently heard of? And that, there are various different marketing strategies that these brands are pursuing to try and establish their place in the market. And some are doing better than others. The difficulty is they're all trying to do it at the same time. So it is very difficult to try and work out where they should sit, not just relative to each other, but relative to the existing manufacturers as well.
Yeah, because that really is the challenge, because it's all happening pretty much at the same time. I was interested in what you were saying there, Dylan, about the benchmarking. When you benchmark these brands, are you benchmarking them against Korean brands, Japanese brands, European brands, or is it really a mixture of whatever is on the market at the moment?
Yeah, a mixture really. If you think about what we do, for example, with the Korean brands, we're comparing them with mainstream European brands as well. So the ideal, obviously, is to get a nice varied competitor basket, and the wider that space that covers, then obviously the wider view that you get of the relative positioning of that vehicle. It's, we're just thinking about it in terms of when that comes to market, let's say as a 3-year-old car, and it's sat, what is it sat next to? What are people considering against it? And that's the way we try and set those competitor baskets up.
And Derren, from a current value perspective, I mean, is it any harder to sort of, because going through what Dylan's been talking about there, trying to understand the new entrants, remarketing strategies and pricing strategies, and we know already that some of them are very quick to adjust pricing, and they're not frightened of just doing a price adjustment to the market. How is it any more difficult, or is it how is it for you and your team to keep an eye on these new entrants as they start to emerge and build that network and infrastructure?
It's more difficult because there's less of them, obviously. So it's a sort of an obvious sort of difficulty that we have there. So we're looking at the retail data, we're looking at the trade data. Initially, when we first put a value into our current value product, we have to do that when there's none in the market, because from day one, finance houses want a current value on these vehicles. So we're doing that from a sort of an algorithm from the forecast values, and then as they start to appear in the market, then you have to look and say, well, is that where they're going to be, or are they, when more come back, are they where do they sit then? So we're dealing in less data, which makes it more challenging. I think, it's we're looking for, and then you get things thrown at you, like sort of what happened with Fisker, obviously, and they've taken quite a lot of pain in the market, those vehicles, because of what happened to them. So there are lots of nuances in there, and we've got a lot of history on an Astra or on a Golf or on a Focus. You haven't got that history on what's going to happen with these vehicles. And the biggest problem they've got, all of these companies, is the marketing side of it, is getting the awareness out there, as Dylan said, getting them known. If you ask any sort of man in the street, have they heard of them? They probably not, but that's going to take some time. And what do they do with their volumes in the meantime? Do they try and reduce their values, their new car values, initially, to try and get them out there? Do they put them into Motability? Do they put them into daily rental? What sort of volumes do they do that to try and get themselves a little bit better known? So it is quite challenging, but we're in a very comfortable place with the amount of data that we get. We get over 50 different suppliers of trade data, which obviously encounters thousands of dealers within that, buying and selling cars. And then on the retail side, we've got really strong levels of retail supply, where you can see what the patterns there as well. But it can be difficult. And as I say, then you get a Fisker thrown at you, and everything sort of goes out the window, and values then dropped very considerably on those. But overall, it's just more challenging, just because of the data supply side of things, and the lack of history, and what do they do next? Where are those volumes going to appear, and at what prices, and that type of thing. We don't like the volatility of dropping new car prices to generate generate demand, because then that can have a knock-on effect on the used car market.
Yeah, no, it's I know you say they're coming quick, and they're coming differently than what we might class as legacy OEMs in the way they enter the market and their strategic plan for the market. So it's going to be interesting. Talking about volatility and changes and things like this, sort of a final question for you both, really. Lots of talk at the minute around whether the new government will be moving the ICE ban back to 2030 from 2035. It was outlined, obviously, in the Labour Party's manifesto. Firstly, I suppose there's been rumours that it is happening, but it's not been 100% confirmed. And I think it was rumoured to be happening for cars, but nothing yet on LCV. Firstly, I suppose to both of you, one, do you think it's going to happen? And two, will there be any ramifications onto either the new or the used car market if it does happen? Or is it the ZEV mandate that's really driving decisions at the minute?
It's that, the whole point about when it moved previously from 2030 to 2035, if you're not changing the ZEV mandate, it doesn't make a lot of difference because everyone's still working to the same numbers anyway. We did see a short-term minor kind of blip in terms of consumer demand when it went out to 2035, people thinking, oh, it's not that imminent, I don't need to move into an electric car now, or maybe look next time. And we'll probably see the reverse happening again, a bit more of a boost to demand in the short term when it becomes a bit more imminent. But it doesn't look like they're in any hurry to make a quick decision, I would say.
Because like you say, I mean, the ZEV mandate was aligned to the 2030, wasn't it? Not 2035. And when it got pushed back to 2035, the ZEV mandate, was out of kilter with it. So reversal would align better with the ZEV mandate.
Yeah.
Absolutely. I think
fans is a different question altogether, and it's hard to think how they're going to manage that. Sure.
I think the manufacturers are just after some clarity on it, really, and I think they're all probably aiming for that 2030 anyway. And they're planned so far in advance with their model mix that they're already planning for that. So I think it will bring some clarity. It feels like a long way away, but then it isn't a long way away. 2030, will we get to that with zero ICE cars? Who knows? But it's going to be a challenge, whatever. And as I said earlier, once you start to mandate things and force them onto the market, it can have some dynamics. But I think the clarity will be welcomed, and I think it will happen. I think Labour will push it back to where it was to 2030.
Yeah, and I think to Dylan's point earlier on when we were talking, there is some harder levels to come in sort of 26, 27. If the market doesn't start to change quite quickly.
Yeah, every new car needs a used car buyer as well, doesn't it? So you really need some impetus in the used car market because these volumes are coming back in higher numbers. As I said, we've already seen more sold this year than the whole of last year. You need to have that used car market as well. So a lot of it's still about the charging infrastructure. It's getting confidence in it. It's getting dealers confident in stocking them. It's getting consumers confident in buying them. So although we need them to buy in the new car market, we need them to buy in the used car market because that underpins the new car market.
Yeah, I mean, let's say we're probably getting into the realms of too much of politics if we're not too careful today. So, I mean, for me, there's a lot going on. And I think, getting both yourself, Derren and Dylan on in terms of that, what's happening today, what that means for the future, and trying to manage and align, today's short-term dynamics to long-term activity is interesting and obviously a bit of insight into the things that you and your teams have to sort of manage in this period of constant volatility. So it's been great to have you both on, and I hope you both come on again in the future because I think today's conversation has been fascinating and very insightful for the listeners.
Yeah, it's a pleasure. Look forward to next time.
Well, that's all for this special weekday Motor Trade Radio podcast. Many thanks to Derren and Dylan for joining us. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.